Well, good morning. I'm Jigendra Rana. The topic of the discussion today is the real cost of life and health insurance. The real cost of life and health insurance. Indians continue to severely underestimate the rising medical inflation and surging healthcare costs. Also, nearly 48% of health insurance policyholders in the country opt for coverage of 5 lakh rupees, that is $5,853, or even less, according to a new survey by India's online insurance marketplace. The 46 pages second edition of the company's Consumer Insights survey report, How India Buys Insurance, published in April this year, has revealed that 47.6% of Indians remains unaware of term insurance and its benefits. The report points out critical gaps in health and term insurance adoption, financial preparedness and risk perception, offering insights designed to help individuals make more informed financial decisions. This comprehensive study, based on pan-India responses, highlights key gaps in financial preparedness and ensuring adoption, offering critical insights for the industry. Health insurance is now among top 3 must-have financial products for 28.3% respondents. These respondents ranked health insurance above equities, mutual funds, and government bonds. Indians continue to favor traditional financial investments such as gold, fixed deposits, insurance-linked savings schemes, and real estate. Health insurance has now joined this list. Despite the increasing importance of health insurance, a significant number of policyholders remains underinsured. So a staggering 75% of health insurance buyers in India have coverage of rupees 10 lakh or less. The issue is most pronounced in South India, where 66% of policyholders have coverage of 5 lakh rupees or less. So non-buyers also display severe underestimation of medical costs. About 50% of them believe that critical illness treatments such as cancers, kidney transplants, or cardiac procedures costs less than rupees 5 lakh, which is far from the ground reality today. But the awareness gap remains one of the biggest barriers to term insurance adoption in India. The survey found that 47.6% of Indians are unaware of term insurance and its benefits. However, there are signs of improvement. Industry-wide term insurance grew by 18% in financial year 23-24, compared to a CAGR of just 2% over the past 5 years. The survey found that 56% of respondents who are aware of term insurance have a positive attitude towards purchasing it. So many non-buyers fail to consider key financial factors such as child education, marriage, loan obligations, spousal retirement, and medical contingencies when evaluating their family's long-term needs. Experts recommend a life insurance cover of 15 to 20 times one's annual income to ensure that dependents can sustain themselves for at least 10 years. Only 13% of non-buyers accurately estimate their insurance needs in line with expert recommendations. PB Fintech Joint Group CFO said a large proportion of consumers plan to sell ancestral assets or borrow money during a crisis rather than opt for simple, accessible solutions like health and life insurance to protect their families as an industry. So it is imperative that we strengthen awareness and improve the overall customer experience to drive broader adoption and ensure financial security for all. How India buys insurance, it reaffirms a fundamental truth. Insurance is not bought in India, it's nudged. While the findings highlight persistent gap in coverage and financial planning, they also serve as a wake-up call for the industry. So India, this leading online insurance marketplace, has unveiled the second edition of its highly acclaimed Consumer Insight reports. The report uncovers several key insights, including the fact that Indians continue to severely underestimate health and cost. Nearly 48% of policyholders opt for coverage of rupees 5 lakh or less. So Indians continue to favor traditional financial investments such as gold, fixed deposits, insurance linked saving schemes, and real estate. Our health insurance has now joined this list. Health insurance has now joined this list according to the survey. 23.8% of respondents ranked health insurance above equities, mutual funds, and government bonds. So the awareness gap remains one of the biggest barriers to term insurance adoption in India. The survey found that 47.6% of Indians are unaware of term insurance and its benefits. However, there are signs of improvement. Industry-wide term insurance grew by 18% in financial year 2024 compared to a CAGR of just 2% over the past 5 years. The survey found that 56% of respondents who are aware of term insurance have a positive attitude towards purchasing it. So the study shows that a large section of policyholders remains underinsured. Nearly 48% have coverage limited to rupees 5 lakh or less. When it comes to life insurance, the report found that 87% of the individuals have not purchased term insurance, underestimates that families' long-term financial requirements. Many overlook essential costs, including education, medical care, and retirement. Only 13% estimate their coverage needs in line with expert recommendations, which suggest life cover equivalent to 15 to 20 times one's annual income. One's annual income. So the Indians still do not have that kind of mentality of having the larger sum insured of their health insurance policies, despite of the fact that the cost of treatment is increasing day by day. And for the critical illnesses, it's not possible to go for the treatment within such a small sum insured of 5 lakh rupees, which is the average sum insured taken by the common Indian insurers insured. common Indian insureds. Almost half of Indians are aware of term insurance, so they are taking. But the other second half, that's a question mark. The insurance would spark more than just a passing glance from people, especially after a global pandemic and rising medical cost over the past few years. Would have affected nearly every Indian family in some way or the other. Yet a new finding might surprise you. Nearly 48% of Indians don't know what term insurance is or what are the benefits of having one. So financial experts often recommend that term insurance coverage should be sufficient. Or it should be about 15 to 20 times your annual income. The way, even if something happens to you, your family can maintain their lifestyle and meet future expenses without being financially broken. But the report notes that only 13% of non-buyers surveyed actually estimated their insurance needs in line with this advice. A large proportion of consumers plan to sell ancestral assets or borrow money during a crisis rather than opt for simple, accessible solutions like health and life insurance. So, to protect their families, as an industry, it is imperative that we strengthen awareness and improve the overall customer experience to drive broader adoption and ensure financial security for all. That is necessary now, because the main purpose of the insurance is to protect the family financially. That is possible only if the family is insured for a reasonable sum which can meet with the requirements. The real health scenario is not very good in India. In fact, the people are not much aware of their insurance requirements, especially in case of health and life insurance. Reason being, most of them are unaware. Most of them do not have that insurance mentality. So 3 of 5 in Indians succumb after cancer diagnosis, in India. Nearly 3 out of 5 people in India succumb following cancer diagnosis, Indian Council of Medical Research has claimed. So the Apex Health Research Agency's claim is based on an analysis of the estimates of evidence or incidence and mortality of cancer from Globecon 2022, an online database that provides cancer statistics for 185 countries. India is one of the largest contributors to global cancer burden, ranking 3rd in terms of new incidence. China ranks 1 in cancer incidence, followed by the US. So according to the ICMR study published in the journal, the Lancet Regional Southeast Asia, the incident to mortality percentage in India stands at approximately 65, which means that 3 out of 5 individuals would be expected to die if diagnosed with cancer. So the incident to mortality percentage in China and the US stands at 50 and 23 respectively. Children and productive age 15 to 49 individuals, ICMR says, have a 0.1% to 2.3% chance of developing cancer and 0.08% to 1.3% chance of dying from it. Our study adds middle-aged and generic individuals have a higher 8.3% to 10.3% chance of developing cancer with a 5.5 to 7.6% chance of dying from the disease. So health insurance premium costs have surged, forcing some policyholders to either downgrade or drop out of their cover. 1 in 10 policyholders has missed out on renewals in this financial year. About 10% of policyholders have seen their renewal cost rise by 30% or more this year. One half of them paid the full premium. Why are premiums soaring? Insurers say a worsening claims ratio. The percentage of claims to total premium collected is behind the hikes. The reason why a section of policyholders see sharp hike is that the health premiums do not rise in a steady, predictable manner. So they tend to jump at intervals, and insurers typically adjust their rate schedule every 3 years to account for medical inflation. The rising cost of the treatment premium also increase with age, with sharper hikes in later years reflecting higher claims and older age growth. So over the last 10 years, the compound annual growth rate in premiums ranged between 5 to 10% or 52% of policyholders. This means that for more than half of them, rupees 100 premium increased to rupees 162 to 259 after 10 years. Thank you very much.